What's going on, traders? Hope everybody had a fantastic holidays, and we are back in action for the last 2 days of 2024. We've got a little break on Wednesday. Markets are closed January 1st, and then we start right off into 2025. Looking forward to a great year with each and every one of you. As I said in the last video we spoke a little bit about game planning, thinking about, and starting to write down some of your goals for 2025, and also reflecting back on your trading year in 2024. Not only some of the things that you still need to improve on, but don't forget to pat yourself on the back a little bit and look at the ways that you have improved and grown as a person and as a trader. So you always want to really look at both sides there and see what we have done well and, of course, what we can improve on. So this video, since it is a short week, quote unquote, I'm going to go through things a little bit quicker, just look at some daily levels and some day trading levels on the E-mini S&P futures as well as the NQ NASDAQ 100. We'll start off with some larger time frames and then break it down from there. But before we get into the video, of course, this information is all for entertainment and educational purposes only. In no way should be viewed as financial advice. But let's also take a look at the economic report for this upcoming short week. Doesn't look like we have really too much in store for us, but we'll take a quick peek anyway here for the last 2 days of 2022 and the first of 2025. All right, so Monday, December 30th, Chicago Business PMI 945, pending home sales at 10 o'clock. Nothing really to be too concerned about right there. Tuesday, some data at 9 o'clock before the market opens. Wednesday, as I already mentioned, the markets will be closed. Thursday, initial jobless claims at 8:30. We'll be paying attention to that for sure. Construction spending, 10 o'clock. Not too worried about that being a market mover. And then Friday, January 3rd at 10 o'clock, ISM manufacturing. So not really too much to worry about. Definitely will be paying attention just from the macro perspective, keeping a heavy watch on the job market. But other than that, nothing really to be too concerned about, kind of as to be expected. All right, let's start to get into some charts now. Going to take a look at the E-mini S&P futures first, as we always do. Going to start off with the weekly chart and just see what we can take away from that perspective. All right, 1 second. All right, let's zoom in here. All right, so what is this weekly candle telling us from location and where we are in the trend? Well, we are still in, obviously, an uptrend overall. Nothing really has stopped as far as that. We did obviously have that big red week 2 weeks ago, and that took us down and got the bears, I would say, salivating at the mouth. But the bulls did come in and did what they needed to do. This past week, really inside week, right? We traded right within last week's range, and we kind of had mapped out this zone right here that was really going to be the make or break for the bulls or the bears. Now, obviously, we had come up, bulls had made a nice shot here, coming up and pushing up earlier in the week, trying to get back above. We really, the best thing for the bulls that we could have seen is if this weekly candle really had closed maybe right here, something like that would have been a little bit more constructive, I think, for the bull case overall. But you can see here from this top wick, and price came up, was not accepted, and they pushed it back down. And we ended up closing the week right at 60.29 and a quarter. So again, what am I going to be looking for? We need to start to take out, now we had this 2-week balance right here, right? So we need to see price except back up in this general area right here, which bulls were unable to do. We closed just right under the start of that zone, the lows from the week of the 2nd, and also keep an eye on the lows from the week of the 9th there, and that's how we kind of get that zone. Also the highs from the week of 11/11 as well. So that gives us really that bull zone where we need to see acceptance for them over 60/30 to about 60/50. Right, 645 would be a nice weekly close. 6/650 over 60/50, of course, would be the most ideal close overall. But that would still keep us in last week's range, so we have to be aware of that and cognizant of that. We can certainly create another slight supply area right from the weekly open here into the highs, so we can another little zone there. I would say about 60 even to about 61.12, 61.15, give or take. And that's really what we're going to have to see for that next continuation to get to match the equal highs here, and then potentially come up to 61.65 and make a new all-time high. But what can we potentially expect as long as price stays underneath, certainly underneath 60/30? Well, bears still have a bit of a chance to be able to push price back lower and potentially trade back within the bodies of the week here from November 18th, the 11th, and the 4th. Big candle here on the week of the 4th, back from the start of November. I would suspect that we did spend some time here in the previous 2 weeks, but down here we could have a little bit of weak structure just below if bears really start to get underneath the 58.75, and of course watching the low part of this little zone here at 58.52. But what do we have right underneath the weekly 20 will be right there, and I'm sure this will start to drift up a little bit as well into next week, like so. So even if we did come down there, huge area of support, which I would imagine that people would be salivating to pretty much buy. And so far, we've had a couple of dips right below that weekly 20, but more or less it has been holding pretty consistently strong here. Obviously, it dipped here. It didn't dip as drastically, but held here. Didn't even get close, but still held. And we can really, kind of make a cloud, right, if you wanted to visualize it that way, of an area where these short-term moving averages on the weekly do hold up quite well. All right, so with that being said, let's also take a look. We're going to get down into our daily chart here, and we'll take a look at some of the other daily charts that we have been utilizing during these videos. But let's come down into the daily chart and see what we can take away from that perspective. We'll take a quick look here on the chart that we already kind of have in front of us, and then we'll go from there. All right, so we did close. We pushed up here. We had one day, right? It was the 26th, where we had tried to make a nice close over that daily 9 and 20. However, unable to do so. The Friday session was down for the first half of the day, and then obviously it was bought up towards lunchtime, or the end of lunch, and we got a little bit of a push back up higher, repairing some of that damage that was done in the morning session. However, we still failed to close above that daily 9 and 20. The 20 right now sitting at 60.70, basically 60.69, and the 9 is sitting at 60.57. So basically 58. So we're getting pretty close together right there. So we'll be definitely watching that as well and see if these kind of start to flatline, or they continue somewhat of that sloping angle that they are making, trying to come back up and then right back down. Certainly could make a case here maybe for a little bit of an M type pattern. So I'll be watching out for that as well. You could call it head and shoulders too as well. Really means nothing to me unless a neckline breaks. We already pushed down here, so you could make a case that this is potentially a neckline. In my viewpoint, I would say it's not, but it is a big structural level. That goes without saying here. And you can see this general zone right here, and this is right here on the 11th. This is where the market structure shifted, as well right here back, and so we balanced, and then once we broke up, that's what took us higher. So definitely important for this zone to be held. But if I was to say that if this was a head and shoulders, I'll probably make that neckline, probably make that neckline somewhere around in this general area. I would really watch the lows from the 20th of November and the 19th, kind of that zone. If you want to come into December, the 19th as well from December, kind of that double bottom from the 19th. And wow, 1 month apart, double bottom. The lows were exactly equal. Now, that's interesting. Either way, let's watch that, pretty much that double bottom. I think that that's a fair spot to keep an eye on right there from the lows from the 19th of the past 2 months. So I'll just mark that off right there for us just to have that. All right, so let's get into one of the other charts that we have been monitoring. And here we go. All right. And as you can see, we kind of already have this zone that we were just talking about from those matching lows already. Oh, I'm sorry, already worked out. It's actually a little bit lower. I'm sorry. I was off. This is that high of that balance zone here. So in any event, you can see here we came up about that 6110 was about the high that we reached from the 26th. So 6110, watching that, and basically it's interesting, you know, we have these matching highs from the 26th now, and pretty much from the 13th back and the 12th from back in November. So that will be interesting. And then we've got those equal lows as we already just discussed in that last chart that we were looking at, down right around 59.30 thereabouts. And so we'll be watching that. But here's that previous balance right here that we were watching earlier that we had come into. And so right now we also just have to kind of be aware, certainly because it is a short week. Might be a little bit more. I don't know how much tax harvest loss, you know, will be going on. I think we probably saw most of it overall, but something we still want to keep in mind as we're coming into the end of the year. A lot of the big money players are kind of, you know, probably taking it pretty easy this week. So, you know, I would not really be expecting too much of a huge move. Anything can happen, of course, certainly if we get some, you know, fly-by-night news that could push us in a drastic direction. But but barring that, I don't really see. I think we would be more likely to see possible consolidation, probably between the. Let's see if they can hold up above that 60.25, and if the ES can hold that and certainly get back above 60.40, probably the range we might get trapped right up in this type of zone. Let me move this over just a little bit to get this volume profile a little bit out of the way. Hold on. There we go. So we could just be trapped within this range right here. That definitely is a possibility. But if we really start seeing acceptance underneath that 60.30, well, then I think that we would be more than likely seeing consolidation a bit lower, right? And that would be the most bearish type of consolidation, I would say, if we are trading back below the 60.25. Look for lower prices and probably to come back down. Of course, test that 6,000 figure again, and then potentially maybe back towards the Friday lows. It's certainly possible. But you know what? If we do break underneath that 60.25, what I could see potentially happening is that we end up closing, we come down lower, we actually don't match the lows from Friday. We come down just, I'm going to throw a number out here. Let's look at the highs right here. So I'm not, what if we came down basically to the highs here, right around 6,000 on the ES, and then what ends up happening is that we putting in a higher low, right? This would be our swing low, another marginal one here. This one would really be the next higher low that I would be looking at overall. I'm going to put these little lines there. But what if we get a candle that kind of ends up closing something very similar, something like this, but that would really be putting in a higher low from the Friday session. So that could happen as well as we just continue to really trade still in last week's overall range, as we already spoke about before. So let's see what happens. I would start to again feel a little bit more bullish if we can start to really see some acceptance over that 60-40, 60-50 area. That would be good. And then we can get that bullish consolidation like so, for a chance to come up and get over that 610. That's going to be key to take us up into 61.30, 61.25 area right here. And that's going to be the back test of that next major balance zone that's right here that caused that breakdown. So I think that that would make sense. And you can watch out, I mean, for a potential short zone or for sellers to come in there, possibly on an intraday basis as well. Very possible. But that's what I would be thinking if we do start to really hang out and consolidate over in this general area like so. Now, what would be the most bearish case? We see that daily consolidation underneath 60-40, underneath 60-25, be looking probably for the lower prices then, right? Because we'd be trading right at the lower end of Friday's range, and that can give the bears the setup to go ahead and potentially, I said I don't know if it will happen, maybe they just end up stopping at 6,000. That would make sense, but potentially matching the lows again. And of course, if they get underneath those lows, watch out there, 59.74 and then 59.60, 58 area that starts to give up. Well, then we'll certainly be looking back down into the 59.20s area. So that's pretty much what I am seeing here for these boos. All right, let's take a look at some day trading levels. Since we did trade last week within the same range, nothing has really changed as far as they are concerned. Okay, so let's look at some of those. Okay. Okay. All right, so zoom in a little bit. So what do I want to see here from the day trading perspective? All right, if bulls can hold over the 60-25 right over here, and it's just underneath the daily, the hourly 9-period moving average. But from the price action perspective, I want to see acceptance holding over the 60-25 area. Watch out here. There was this. You can see here where we did have an hourly acceptance and then it fell back below. So I don't be cautious about this situation happening again once here. It certainly can, but in this case you can see once it found acceptance, that brought us up higher once again. So if we see that acceptance, I think that would be a good start. Now we do have the 200 SMA on the hourly here, as well as the 20 just above us. The 20 is sitting at 60.46. But so I would think that potentially if we do find that acceptance, we could come up, potentially test that hourly 20. And if we are able to get over that 50 excuse me, that 50, 46, 47. I would be looking there to get real close to that 60, 60, maybe 60, 57, depending on what Globex does, but we just have to be aware that 200 is right in that area as well, so we can find some resistance. Not only do we have a level here at that zone, but some confluence as it stands with the hourly 200 there as well. So if you are looking for that short trade, that may be a spot where we could find some sellers coming into the market. Also matching the highs pretty much from this 12 o'clock candle here back on last, not 2 Fridays ago. However, if we do find acceptance over that 60-60, well, then I'll be looking for higher prices once again. Look to see if we can come back up and retest area where we had found a little bit of an hourly balance. I think, what is this, 1, 2, 3, 4, 5, 6, 7, about 7 or 8 hours here where we hung out and then finally broke down. It wouldn't be out of, I wouldn't see that this would be a unlikely scenario. We find acceptance over 50-60, excuse me, over 60-60, and let me see if I can draw. We find acceptance like this, and then we see price do this. Come up, back test this previous balance right here, and again, if we're looking for that short side, maybe we see the sellers come in right there and then bring prices back lower. So I would say, though, I mean, still about 50, 60 to about 60, excuse me, 60, 60 up to about 60, 85, maybe 60, 90. I have right on as this level is 60, 87. Anywhere in that general area could be where you might want to think about a possible short. But if you are long, maybe a place to take profits, scale, exit, get down to runners. You know the drill when we come up into a major area of potential supply or resistance. However, I will continue with the bull case right here. If we do see acceptance, and I'm going to say 60, 90, see back acceptance over that, we'll look for those hundreds, of course, and then 6105 for this potential triple top setup coming in if we do, and we'll just look to match these highs right here. So, but if we get over that, 6125, I think would be the next spot. Hourly VPOC right here, that would make sense to me to be the next target, and it comes in right to our next price action level as well, right in that zone. So hourly VPOC sitting at 61.65, excuse me, 61.60, 61.26, dyslexia in full swing there. And then the VPOC, and then I do have that price action level at 61.64. So nice confluence there. And certainly a potential long target that I can see being achievable if we do find acceptance along those levels. Now, for the bears, right, we want to see the price pushed back down, accepted under 60.25. And if that's the case, look to go ahead and get close to that, the figure again, 6,005. And of course, you got the figure right there at 6,000. Break under that, matching the Friday lows down around 58.85. And that was pretty much the hourly 12 o'clock low there on the Friday session, matching the hourly low from, what is this? This is the close last Friday as well. So I would watch out for that. If the bears are able to break underneath that 59.84, I would be looking from these hourly lows from 10 o'clock. What session is this? This is from Monday. We're going to be taking us down to 59.65 area. That would probably be my next guess. Take out that low, and I'll be looking for 59.55, 59.60. Look at these hourly highs from back last 2 Thursdays ago right here, and kind of we hit that twice. So that would be the next level down into the 59, excuse me, yeah, the 59.55 area. All right, that's pretty much all I'm going to be watching here for the ES. I'm going to just expand these levels while I have them up in front of me. Boom. All right, let's get into NQ. All right, I'm going to start off with that blank weekly chart. Okay, so what can we take away here from the weekly chart? Same type of situation in that we are trading still within the previous week's range. So you can see here price action is contained. Right? And we were unable to really, we came right into that opening pretty much. I mean, we just barely got above it, but either way, we closed on the bottom part of the last week's range. So again, I would say that that is not the most bullish look. Of course, we are still over the weekly 9 and 20. So when I say it's not the most bullish look, I just mean that we're not going to be hitting all, next all-time highs, within the next day or so. It just means that, the bulls have some work to do to get firmly back in control. Now, I am going to mark off the previous week's highs here because we are still encapsulated in that range. And you can see it really worked out nicely. The low from the week of the 16th, pretty much the high from back in July, the start of July. So definitely going to be paying attention to that. But you can see price here closing down towards the lows. And we talk often about using that 50% of a weekly candle, of a daily candle to kind of give us a potential quote unquote bull or bear bias. This one closing below the 50% of the week of the 16th range. So I'm also going to mark off about that 50% marker right there just to have it for us as kind of a line in the sand here for us. And that's going to be 21,755. Okay, somewhere around that area. Of course, it's very hard to get NQ right to the tech. So we have to give ourselves a little bit of a room there. But generally speaking, I think that 21,755, 760, 65, you get the drill area. If we start to see acceptance over there, let's get a couple of daily closes over that and then see if we can't start to trade back towards the previous week's range and the highs of the week of the 16th range up in that 2200. If you're really looking, I think, for more confluence on the long, let's see a couple of daily closes over 2200. Let's get back over that figure and then we can look and talk about attacking those previous highs once again, or at least if we're over 2200, or excuse me, 22,000, we can potentially then at least come up to test the highs from the week of the 23rd, and that's about 140 points, 120 points higher. The high for the last week was a 21. 21, 22, 130. But why is this? This says 22, 111. I guess I got to get a little bit closer. Yeah. We're going to say 22,115, I'm going to call it. So let's see, we can potentially do that, but we have to obviously get over those weekly highs for the chance to have any hope of getting up and getting close to matching the all-time highs. Still definitely very overbought here from that weekly perspective. Not even close to the 9. We hadn't even tapped it in last week, so that's really not a concern. Definitely a little extended, though. That goes without saying, but let's see what happens there. And these are probably going to start to drift up. We'll have to see what next week looks like coming into the new year. So certainly going to be watching. If they take out these weekly lows, that's going to be 2140, 475. 21,475. Underneath that, watch out. Probably going to go ahead and attack the lows from the week of the 9th. Down by 21,350. And that, if we break that, that's going to be very, very good for the bears. It's going to be the highs. Look from the week of the 11th, the 11 that week. Break those highs. And I think it would be likely that we will come down real close to that weekly 9. But it, of course, will start to drift up a little bit higher. So it's hard to exactly say where we will end up. But we could end up down in the 21,200s, maybe 21,240, something like that. So I'll be watching that. It's hard to say, of course, where it's going to be. So, but like I said, underneath 21,340, and watch out below. Now, as far as what we could also see here, continued consolidation. Holiday week, short week. Could see something like this. If we do start to consolidate over 21,750, 755, I would like our chances for higher prices. Let's go into the daily chart on this view, and then we'll go into one of the other charts that we already had built out for NQ and see what we can take away from those levels, and see if we want to add anything, and see how those levels have been reacting overall. All right, so we're going to put the daily highs up here, and I'm sure I probably have them on another chart as well, but we pretty much matched the highs from the session of the 11th, giving equal highs there. So around that 2220 zone, that was about the highs here. So when we were talking about that potential consolidation, we see over 21,750, 755. We closed basically right on the daily 20, the daily 9 sitting at 21,820 basically. So it's definitely possible for us to get back over. We've got our swing low right here, another potential higher low. Let's see if we put in another higher low, or they do close it above. And even if they close price, here, it's still going to be, a higher low, right? Something like that. Either way, I'm going to be cautious this upcoming week for just that potential sideways, and it's very similar to ES, whether or not we're going to be over this midpoint that we're going to be consolidating or trying for the previous highs from the 26th, or if we're staying underneath, then we're going to be liable to go ahead and potentially attack the lows again from the session of the 18th down in those 21,340s. very possible. And I really only would be looking for that to happen, right, if we really sweep the lows from the Friday session. That's what the bears were going to have to find acceptance under that 21.7, it's at 21.475. Okay, then we can come down and start to take a look at these lows right in here. So that's what I'll be watching. And of course, why is that important right here? We have this previous balance, you can see, and that's where when we broke out of that balance, it took us back up. So that's where we had a shift in the market structure and we started to go back up higher. So let's just pop into one of our previous charts. I don't like that one quite as much. This is the one that we just made. Okay, here we go. This is the one I was looking for. Start of the new year, I'm going to probably start fresh with all these charts. All right. So I've got this level here. We were talking about that 21,750. I got on this chart, it's 21,760. 10 points is nothing for NQ, so pretty much the same area here that we need to find acceptance back over. And from this viewpoint, it's going to be for even more confirmation. We already talked about the 22,000, but 21,820, start to see some acceptance over that here, like so. Whoops, that's not what I wanted. Give me some candles like this. Something like that, or up higher. Either way, just as long as we're still above this previous, so the supply here, turning it now into demand, we can go ahead and look for reaching for the Friday highs, and that could take us up to about, again, that 22,015 area. We break up back over that and then look for Thursday's highs coming up just over 22,000, 22,115. And that's really going to be the big area, right? That's going to be the key make or break for the bulls to be able to see whether or not they can actually continue this move up higher. We start to get over that. And we can look at the wick here from the 11th. Got 22,120. So 22,120. You can also look at that as an extra sign of confirmation that we need to get over, because we did have a wick up above and then fail. But we start to see really us holding over 22,045, ideally 22,100. Let's look to the highs from the 13th, 22,200 basically, from the daily point of view. And then if they get over that, we can start to look at attacking this general area where we really saw the breakdown, right around 22,240. Okay. All right. I think that's everything I needed to go over for NQ. Let's take a look at some day trading levels. Okay. All right. Okay. Now I'm going to work on the opacity here of the volume profile, because this is starting to annoy me how it's all over the our levels. So I'm going to work on that. Okay, so very similar to ES in the sense you can see we're holding above, right, this high here, this high here. This is when we were talking about the ES holding over and then failing, right? Similar situation here for NQ. You can see the resistance here. You can see when we did find that acceptance, again, we went back up. So what do the bulls need to do? 21,700. Let's hold that for those bulls. Hold it, hold it, hold it. It's a little tricky. This one didn't hold quite as long as the ES one did, but so we're going to say over the figure at the 700 can look maybe for that hourly 20 sitting at 21,785. And if we do get over that, 21,840 would be my next level. Start to get over that. We've got that daily SMA, not the daily SMA, the hourly 200 SMA sitting at 21,890 basically. So that's another about 50, 60 points up higher. Can find some possible resistance there. Of course, don't want to ever discount the 200. But I think if we do find that acceptance over 21,840 and hold it, then we can try to look, just want to be cognizant of the 20, but we can look for that test up closer to the 22,000, 21,985 is also a potentiality. Watch out as we get into this area. What I could very possibly see is that we come up to this 21,985, push up a little bit higher, get real close to that 22,000, look above, and then fail back below. That would be certainly a nice bearish setup if we see something like that. But of course, maybe for me, if I was day trading this, I might be thinking, all right, I'll take a starter position short around 21,985 and then look to add to it in the 90s, and then I would be out, with acceptance over 22,000 if I was playing that short. But as I was saying earlier, for that bull case, let's hold 21,700 for a chance for 21,840s. Taking profits along the way. Obviously, we have a little high here as well at 21,780. 785, and that pretty much lines up with the 20 where it's sitting now. That's obviously going to move in Globex, and then we've got the highs from 12 o'clock right around, what is this high? It's 21,815 basically. So that's what I'd be looking for, getting as close to that 21,080, but it could get stuffed right in the 780s. And of course, we're going to be watching the 800s as well. Finding acceptance over that 800 and the 840, though. All right, then let's see if we can attack that 200 and then ultimately see is how close we can get to that 22,000. Have some wicks here underneath as well that could cause some issues. Could really have that same scenario I was talking about, that fake break over 21,985, where we come up, breach over 21,840, but then we just come up and hit these lows from this hourly candle back last week. And what is this low? 21,840, so about 30 points higher. Maybe we come up, we try to look above. By that time, maybe the 200 moves down as well. It looks above, finds the resistance, fails back below, and then look for the lower prices to come back down into the 750s. That's definitely a potentiality too. But what if we open up the regular trading session New York morning and we're below 700? Again, I'm going to be looking more a little bit towards that short perspective at that time, and then see what happens if we break below these 9 o'clock lows here. Certainly under, and that would take us down 21,675. So certainly under 20. All right, so under 21,700, I'm definitely leaning a little bit more bearish. Certainly under 21,675, going to be looking for potential lower prices down to the 650s, and then really ultimately back down towards that 21,600 for a potential move. Of course, you'd have to think maybe going long at that point. But if we do break under 21,600, we've got VPOC right here on the hourly 21,555. Basically, it's at 557. You could call it 560 if you'd like, but possible long spot there or potential short target as well. But if we start breaking underneath, I would say 21,550, then look to attack the Friday lows once again. 21,500. Under that, things can really start to fall apart down. Basically, another 100 points lower into 21,400, and then just a little bit below that, 25 more points down, about 21,375. So it's either going to be we hang out here and we come up, maybe we stop there, but we eventually make our way up into this target, or we find acceptance underneath and then we look to trade back down like so, right? And whether or not this breaks over and continues, I don't know. Whether that breaks under and continues here, that's obviously anybody's guess, but that's why, of course, we take profits along the way. All right. I think that's everything I wanted to go over. Let's just take a peek at what's kind of going on here. Even though I said we weren't going to mess with it too much. All right, nothing. I'm just going to take a quick peek to see if there's any red flags that are telling me one thing or the other. I'm going to be more in the camp of smaller moves and consolidation overall. I would say, okay, let's keep an eye on the yield curve here, starting to re-steepen. That is not good from a macro perspective. Let's see how many stocks are trading over their 50-period moving average in the S&P really quickly. I think we're below 50 still, 50%. Yep, still under 50%, not good. There, 200's holding up over. So breadth is pretty weak. New highs versus lows, these are probably in the negative 100. Yeah, I was going to say negative 100. Hundreds. Okay, still below the zero line. Not ideal. Any hope from the junk bonds telling us maybe something might want to go up? More or less flat. Nothing really saying. I mean, they are, we do have our swing low here. And they are putting in higher lows. So, a little contrarian for a higher move. Let's just peek what the bonds are doing. TLT, oof. Not good. New lows. Looks like those are going to look for, I mean, we stay below 88.40 on the bonds. Look for 85.25. That would mean a little higher. Let's look at the yields and what the dollar's doing. Made a new high, but consolidating balance now. Okay, here, yep, we were talking about interest on the yields getting up into the 46s. We get over 46.30, look for 47. Again, 4.7 on the yields. So this, coming up to this 46.30, I think we could probably pull back here. Maybe get a little bounce on the bond market. But to me, this is just saying that there's still some cause for concern about inflation being more sticky than we had thought originally. All right. I think that's really everything I needed to go over this week. It's a short week. Not going to be really pushing any size or doing anything too crazy. Just want to finish out this year and then get into 2025 fresh. I don't even count Thursday and Friday as 2025 personally. My 2025 starts on Monday. But with that being said, it's been an amazing year, and I am blown away. I love the support. It means so much to me. You guys, commenting on my social media and the likes that you give me here on YouTube. It just means the world to me from the bottom of my heart. It makes it worth me spending the time to make these videos. I have no obligation, obviously, to make them. So just your guys' support really gives me that motivation to keep on putting out new content for you guys, and makes it worth it. So again, I hope everybody had a great trading year. Even if you're not profitable, I am sure you are a better trader than you were last year. So like I said, don't kind of put all your progress that you're making as a trader just on your P&L. Even if you lost less than last year, hey, that is a step in the right direction. So don't beat yourself up too hard about any of that. Focus on some of the things that you can make better and some of the things that you did awesome. And that is really what's important. Let's focus on the good this year for 2025. And I'm just looking forward to spending it with you guys and to being a better trader myself and making better decisions myself. I'm not perfect either in trading. I have bad days just like everybody else. I break my own rules just like everybody else. As time to time, I just do it less and notice when I'm doing it a little bit quicker. Hopefully, not always, but before I really do too much damage. But that's a part of the game. It's a never-ending journey. It never stops. You never stop growing, just like in life. You can never stop improving as well. So again, thank you guys so much for the support, hanging out with me, and I love all you guys. Wishing each and every one of you the best. Let's have a great rest of a couple of days left in this year, and let's kill it next year. All right, take care and have a great week and weekend. Bye bye.